Why would a billionaire like Mark Zuckerberg take out a loan to buy a house? He's got billions in the bank, he could literally buy a dozen mansions with cash and still has money left for a private island, but instead of paying in cash, he took a mortgage. Sounds crazy, right? Well, there's actually a genius reason behind it, and today, we're going to break it down, Zuck style. Trust me, this money trick will blow your mind. Let's decode the money move of the century. Welcome back to Finance Decoded. This is the place where we break down all the money moves in simple terms, so you can understand how the rich are playing the game. That if you are new here, make sure to hit that subscribe button. Trust me, you'll learn some seriously cool things about money, the Zuckerberg house mystery. Alright. So let's talk about this $6 million mansion Mark Zuckerberg bought in Palo Alto back in 2012. Wait a minute, does anyone else thinks that sounds like a mansion for a billionaire? Yeah, it's not even his most expensive house. Here's the thing. At the time, Zuck was 28 and already a billionaire with $15.6 billion to his name. So, why on earth would he need a 30-year mortgage for a house? The simple answer. Free money. That I know, sounds crazy, right? But hear me out. Zuck's mortgage rate was just a little over 1%. Meanwhile, inflation in the US is around 2.5 to 3%. Which means, he's borrowing money for less than it's worth. How does this work? Let's do some quick math. Imagine you borrow $1 million at a 1% rate, you stick that $1 million in a savings account earning 2.4% annually. That's $24,000 a year in profit, while you're paying the bank only $10,500 a month. You're literally making money while you pay for the house. And don't forget, if you have $100 million or $1 billion, you're making big money just by borrowing for cheap. Opportunity cost. And why it's smart to borrow. So, why buy a house in full when you can use that money for better things? Let's say you're a businessman and could easily pay for $1 million house in cash. But, what if you could get that same house for 1 to 2% interest, and then invest the rest of the money in your business or stock market? Historically, the stock market returns 8% per year, so over 30 years, that's a lot of extra cash you could make. But hey, don't just take my word for it. Take Elon Musk, for example. Elon took out a $61 million mortgage for 5 properties in California with just $180,000 a month in payments. And yes, this is a guy who could pay for the whole thing in cash. Why borrow? Because it's a smart use of money. Even Jay-Z and Beyoncé took out a mortgage for their $88 million home. Why? Because it's a better use of their money than locking it all up in a property. Why the super rich get better deals? But hold up. Here's where it gets even juicier. Why do billionaires like Zuckerberg get such low rates? It's all about risk. Banks love lending to people who are pretty much guaranteed to pay back, and when you're a billionaire, you're basically low risk. Banks trust them, so they offer crazy low rates. But for the rest of us? Not so much. Sorry, normal folks. But here's a secret, these low mortgage rates aren't just a one-way deal. Banks love giving these deals to the ultra-rich because when their companies need a loan, they know where they'll go. It's a win-win. Leverage, the superpower of the rich. Alright, let's talk about leverage. Now, I know what you're thinking, leverage sounds like some financial wizardry, but trust me, it's simpler than you think. Leverage is basically using other people's money to make more money. Sounds like a cheat code, right? Video game. Here's an example. Let's say you want to buy 100 phones for $10,000, and you sell them for $11,000. Boom, you make a $1,000 profit. Pretty good, right? But here's where the magic happens. Instead of using your own $10,000, you go to the bank, borrow $990,000, and use that with your $10,000 to buy 100 phones. Now you're working with $1 million. You sell those 100 phones for $1.1 million, pay back the bank, and boom. You've made $90,000 in pure profit. That's how you scale up. That's leverage. And yes, the rich use this tactic to make even more money. The rich people's secret, risk management. Now, here's a secret the rich don't want you to know. Risk management. Sounds boring, but it's what keeps them on top. The super rich know how to balance risk and reward. They're not throwing their money at any wild idea. No, they're making calculated bets. For example, they might borrow money for a mortgage, but they don't just sit on it. They use that borrowed money to invest in businesses, stocks, real estate, or even crypto. If they're feeling adventurous, they spread their money around, manage their risk, and keep their financial empire growing. So, while leverage might sound scary, when used wisely, it's a tool that helps them win. The next time you hear a billionaire took out a mortgage, don't just think, wow, that's weird. Think, that's brilliant. If you found this video interesting, smash that like button, and hit subscribe if you haven't already. Also, drop a comment below, what would you do with free money if you were a billionaire? Let's talk about it. Thanks for watching Finance Decoded. Until next time, keep decoding your money.